BlackRock and Vanguard are buying Beyond Meat as the stock is massively oversold right now with an RSI of 21. Only 6 times in the stock's history has Beyond Meat been this oversold. The average return over the next 10 days has been 8.4% in reaction to these massively oversold conditions. So once we see oversold conditions like we are seeing right now in the stock, we have seen on average gains of 8.4% in the coming 10 days. So I'll jump into this chart in a second here. I'll jump into the chart at the end of the video and give a price prediction. But first off, I want to go over the recent buying we saw from BlackRock, and then I'll jump into some short interest. So make sure you stay tuned for this video. So with that being said, let's take a look at Vanguard and BlackRock. So Vanguard saw their holdings jump 3% in this stock. So they bought 3% more of their Beyond Meat. So they added to their holdings over the past quarter. BlackRock added to their holdings over the past quarter as well. BlackRock increased their holdings by about 2.5%. So good to see that the largest asset managers in the world are buying the stock. Obviously, they're passive indexers, so not an active decision, but they aren't selling out of the stock. So good to see there. And then let's talk about the short interest for Beyond Meat. So we have 37% of the float sold short at this point in time. And we also have 12 days to cover. So the this days to cover ratio shows you the average days of volume it would take to cover the shares that are sold short. So it would take 12.6 days of average volume to cover the shares that are sold short right now. Typically, when we're looking for a stock that has a high likelihood of a short squeeze, we look for a number over 10 in terms of days to cover to signal a high likelihood of a short squeeze. So given we have a 12 number here, definitely signaling that this stock has a high likelihood to have a short squeeze over the coming days to months, really. And then this is also supported by Fintel. So Fintel ranks this stock as the 154th most likely stock to have a short squeeze out of the 4,400 stocks that they grade. So Fintel is definitely in agreement that this stock has a high likelihood of a short squeeze. And then we can see here that the short borrow fee rate is at 29%. For those that don't know, that basically tells you that investors are charging 29% to lend out their shares to short sellers. The average short borrow fee rate is anywhere from 0.3 to 3%. So to be at 30%, to be almost 10x the average short borrow fee rate, tells you that it is quite expensive to short this stock at this point in time, which signals to me, that this stock, the short selling pressure is somewhat slowing here because we're seeing such an expensive charge to short the stock. And then with that being said, let's take a look a little broadly at the plant-based meat market. So the total addressable market is projected to grow to 24% per year for the next 7 years. So the compound annual growth rate for the next 7 years is projected to be at 20% for the plant-based meat market, which obviously bodes well for Beyond Meat. And then let's take a look at Beyond Meat's financials. So obviously right now the company isn't making any money, but we do have a price to book ratio we have a price to sales ratio of 1.5. which is actually well below Beyond Meat's 5-year average of 11 times price to sales. So on a price to sales basis, the company is trading at a discount relative to its own history. And then let's take a look at the growth numbers. So recently, growth has been negative. So over the past 12 months, revenue growth has been minus 23%, which is well below Beyond Meat's 5-year average of 81%. So definitely signaling there that this stock is growing, a lot slower than it has in the past, right? That's a pretty bad combination, right? You never want to have a stock that isn't making money and is also seeing a drop in its revenue. That kind of signals, disaster, if you will. And that's kind of represented in the stock price, right? So in my opinion, though, given the total addressable market is projected to continue to grow. I do think this could change here, and we could start to see some revenue growth. It is worth noting, though, that the declines we've seen in revenue is slowing. So we saw a minus 23% decline in revenue over the past 12 months. Over the next 12 months, we're projected to see a minus 5.5% drop in revenue growth. So yes, we're continuing to see revenue growth drop, but at least the pace of the drop is kind of slowing. And then gross profit margin, unfortunately, is negative. So this is revenue minus cost of goods sold. Tells you what a company makes for what it sells. So to be minus 2% tells you that basically every time that they sell a product, they're losing money on it. So the 5-year average for Beyond Meat was 21%. So they actually used to make money, their gross profit margin was positive over the past 5 years, but unfortunately, we've seen that turn in the wrong direction, and we've seen gross profit margin turn negative. So it's never a good sign to see declining revenues, a company that doesn't make money, and a company that actually saw a flip in its gross profit margin and is now losing money for everything that it sells. So really not a good trifecta here in terms of a viable business. But with that being said, let's take a look at the company's balance sheet. So we have $210 million in cash per share, which is about $3.28 in cash per share, which is, when you compare it to the stock price, is 38% of the market cap is in cash. So not a bad number there, but it is worth noting that we do have $1.2 billion of debt. So we have roughly $1 billion more debt than we do cash. Don't love to see that, especially for a business that's kind of hemorrhaging money, right? We have our net operating cash flow over the past 12 months is $172 million in the red. So not loving all of these financials. Honestly, the financials for Beyond Meat look pretty poor, but as I'd said, you would really be buying the stock because it's the leader in the plant-based meat market, right? That would be kind of why you're in the stock, is because you believe in the long-term growth of this industry, right? That's kind of why you're in Beyond Meat. You're not buying it for the cheap financials, right? So with that being said, let's take a look at Beyond Meat's chart and give a price prediction based on technical analysis. So let's just go over those oversold conditions first. So right now we have RSI at 21. So for those that don't know, our RSI reads oversold anytime RSI is below 30. So we have a 22 or 21 roughly RSI. So anytime RSI has been this oversold, we've seen the stock rally 8.4% in reaction to these oversold conditions over the next 10 days. So that only happened 6 other times, as I'd said. In 5 of the 6, we saw a positive return over the next 10 days. So the stock historically does react pretty well to having massively oversold conditions. But obviously it's not the end all be all, and we need to really look at this this chart a bit more holistically. So we used this $10 level as support back in May of this year and early June. So we kind of double bottomed off this level and almost doubled over the coming weeks. Unfortunately, we have fallen below that support level and are really trading in kind of no man's land, as we are, right at all-time lows for Beyond Meat. So therefore, we really need to see a change in price action before I kind of decided to jump into the stock. Obviously, we have oversold conditions, and if you wanted to buy just on the backs of oversold conditions, that would be your prerogative. But for my money, for my capital, I'm going to be waiting until we at least move back over this resistance level at $10. Also, it's worth noting that we have very bearish momentum for this stock. And actually, in late September, we saw the 50-day moving average cross below the 200-day moving average, which is a sign of short-term bearish momentum. So that's unfortunate to see as well. So yes, we do have oversold conditions, which could help the stock kind of rebound here. And it is worth noting that over the past 3 years, October has been a bullish month for the stock. On average, in October, shares rise about 4%. So bullish seasonality trends. Oversold conditions, as I said, typically do lead to this stock moving higher, but as I said, I don't really want to fight the daily moving averages. I don't want to fight momentum. I don't want to fight this major resistance level at $10 either. So I'll be staying out of the stock, but I did want to at least update the folks that own and trade this stock on a daily basis. So with that being said, I hope you enjoyed the video. I will end it there. Looking to learn more about the financial markets? Well, I just released a new course that will teach you everything you need to know about the stock market. You can find that at happyinvestingtoday.com. Also on the site, you can purchase one-on-one coaching sessions where I will break down your portfolio, and to better assist traders when searching for setups, I'm selling trading bots, which will tell you how your trading strategy has performed historically on a stock, crypto, or currency that you are researching. If you would also like to see what me and my experienced trading team are doing on a day-to-day basis, join our Discord, which is linked below, for a free 7-day trial. With that being said, please leave a like and subscribe. Appreciate you watching this video.